SBI Life because that reported an inline set of earnings with its APE growing and VNB margin too expanding 70 basis points. Our colleague Yash caught up with Amit Jhingran, who is the MD and CEO of the company, and began by asking him about premiums in FY26, growth outlook and the guidance or expectations from APE growth and VNB margin. Listen in.
If you look at our past discussions, whatever we set for the year, healthy growth with healthy margin numbers. I am happy that in the first quarter we have been able to stick to our guidance, and our top line as well as our margins have gone in line with our goals that we set at the start of the financial year. We want a growth which is optimum for everybody. We want an optimum mix of top line and bottom line, and that is what we have been driving through the quarter. Our aim was to have a healthy product mix where ULIPs and non-ULIPs product both are provided to the customer in an optimum way. And during the first quarter, we have been able to drive that kind of product mix with the help of the products that we launched in the last quarter of last financial year and some products in third quarter also, both in non-participating product, participating product and protection products also. So these products have contributed a lot for a healthier product mix, and that had resulted in substantial improvement in our VONB margin also.
Now, if I speak about the numbers, APE for FY25, the previous financial year, was about 9%. The VNB was 7%. When you say healthy growth will continue in FY26 as well, what is the growth that you anticipate?
So during the quarter, we have given a growth in VONB, which is in line with our growth in the top line.
Correct.
And that is what we are looking for the current financial year also. We had projected APE growth in the mid-teens, 13 to 14%, and though the first quarter was a little lower, but that was on a very strong base of the first quarter of last financial year. So I am sure that for the full year, we will stick to our budgeted goal of mid-teens, 13 to 14% growth.
Okay, that is APE, and VNB would be around how much then in that case?
Around the same level.
Around the same levels. Now let me speak to you a little about the product mix. ULIP share, that in the first quarter on a year-on-year basis came down by about 400 basis points when compared. Do you expect ULIP share to pick up in the second quarter and then in H2 as well? And, do you think FY26 will be a year where ULIP again picks up, and could that put some pressure on the margins?
Our product concentration and new product launches are more focused on the non-participating, participating and protection products. In next month, August first half, we are coming out with participating product on the money back lines, and we are also introducing a new product in the mid-range of the protection, that is from 50 lakhs to 2 crore, where the pricing is very competitive and has very good features for the customer. So our aim in the company is to provide a full bouquet of products for the customer. The focus on these non-traditional traditional products, non-ULIP products, has brought down the contribution of ULIP in the first quarter by 400 basis points. This has largely been driven in our agency channel, where the ULIP contribution is now below 60%. There has been improvement in the banca channel also, and where we want to further improve the sales of non-traditional product. So this focus on the product mix will ensure that we stick to our margin range guidance that we have provided of 26 to 28% for the entire financial year also.
Margins could, when you say 26 to 28%, could it be closer to 26 or could it be closer to 28?
It is very difficult to put your finger on any one particular number, because there are seasonal variations also in the sales. So we will be broadly sticking to our guidance of 26 to 28%.
Okay. As far as what has worked for you in terms of margins also is attaching a lot of riders into products which don't naturally give higher margins. Could that process continue in FY26 and tell us something about the whole process in FY26? How much riders, what is the size of it that you look to do?
So we introduced riders for almost all the products. For ULIPs, it came in the last quarter, the first quarter of this financial year. For other products, it was attached from third quarter and fourth quarter respectively. We are happy to inform that for the first quarter, the rider attachment is 35% approximately across products, and these are now available for ULIPs and non-traditional traditional products also. So going forward, we are aiming for improvement of this 35% to above 50%, and that is providing a good leg up in the margins also.
Okay. One question as far as, you spoke about the margin band between 26 to 28%. What is the impact of surrender value that you are accounting for when it comes to this number of 26 to 28% in FY26?
Our company has been maintaining that surrender value norms, the new surrender value norms are not going to have major impact on SBI Life's performance. And you have seen that the product pricing, etc., for the new products that were launched post implementation of these guidelines were also not majorly different. So we stick to the statement that we have made that we were already providing better surrender values in our policies, and therefore there is no major difference in the margins.
One question as far as bancassurance is concerned. All the worries which emerged at one point of time with statements coming in from the finance minister, from the regulator, reports suggesting that the regulator was looking to put restrictions also on bancassurance. With your conversations after that, are all those worries around bancassurance channel now behind you?
We have been maintaining that the regulator's approach has always been very consultative kind of approach, and we had not formally heard from regulators anything about any restrictions on the banca channel. There were some concerns being reported about mis-selling, especially in the banca channel. Here we are happy to say that the mis-selling ratio for SBI Life is at 0.023%, which is one of the lowest in the industry and almost 1/10 of our nearest competitor. That is because for SBI Life, customer centricity is one of the objectives. We always take very good care of our customers, and we provide solutions as per their needs as are suitable to their financial goals. So that was the reason that company has been seeing a consistent growth in the banca channel also in last financial year, despite all the murmurs about mis-selling or restrictions.
Well, some very encouraging commentary coming in there from SBI Life, especially doing very well as far as the VNB margin front was concerned. The stock near the day's highest point. Well, even as that particular conversation was being transmitted, you had two important results come about. The first one was Shriram Finance. Remember, this particular stock opened the day on a very negative note, taking a negative read-through from Bajaj Finance results, but post the results largely in line with the CNBC-TV18 poll, that particular stock has rebounded quite sharply off the day's lows. And the other stock, that has just gone ahead and reported its numbers is Chennai Petro. It appears there is a loss as far as the bottom line is concerned. That particular stock has seen a sharp fall in the last 5 minutes to the day's lowest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.